come to stay. It has come to pass. All right. So, you know, stay on the journey, keep your chin up, and you'll get there.
You still in the game. You still can win. Now get your butt up.
So I'll hear people say, if you believe it, then you can achieve it. And the problem with that is they're leaving out the most important part of the equation. And that part is work, action, actually doing something. That's what you have to do to achieve anything. Yeah, you gotta believe it, but you better get the work done.
And most people will not be successful. They will not reach whatever they wrote because when there's not anything emotionally attached to it, they're gonna quit and give up. Most people were closer than they ever thought they were to finishing that big thing, but they never finished it.
Let's change that. Let's go here. Oh, okay, here we go. Give me a second. All right, so guys, yeah, amazing data. Let's get started, okay? So we are going to be looking at the markets. There's a couple of other little indicators, just in regards to sessions and stuff that I was testing out, that I was exposed to you guys. But prior to us doing that, we're just going to have a general look around, go over our general market structure, price action strategy, and then we're going to knuckle down with some plays that you guys know about and we can have a look at, etc. Okay, so I'm going to go and I'm going to look at, we're going to go GBP USD and have a look and see what's going on there. Yesterday, we did have Jerome Powell getting an absolute roasting, he was talking yesterday, and if anybody managed to see it, you know, a couple of the politicians weren't holding back on him, accused him of working for the, for big businesses and not for the American people, etc., etc., etc. And it's quite interesting. Where do you watch these things? Where do you see these things? YouTube. Yeah, when there's a live speech, you'll probably find it on YouTube, okay, for you to be able to listen in. It's not hidden, and sometimes it's quite interesting. I find it interesting to listen. All right, let's go and have a look at GBP USD. First and foremost, we're going to go to our charts. We're going to hit this refresh little button, and we're going to understand what's been happening with these markets. Okay, now I'm going to, I'll delete everything off my charts. Why not? All right, now we can see, if we zoom even go up further, so that we've got all of the candles on one screen. All right. This is going to allow me to move it. With all the candles on one screen, we can draw some lines around here, okay? Now, this is just our overall understanding of the markets, all right, of this particular market. We can, with confidence say that this market has been bearish, making lower highs and lower lows, okay? And I pull out a parallel line and I touch it on these data points. These ones at the bottom don't matter too much. Why? Because we're all the way up in space. I'm not going to bother with that. It's going to take up high space. All right. Either way, you can see this market is trading within this range. Okay. However way you want to put your lines. All right. So we are up in a premium. All right. So this is the market trending down. We are up in a premium. Now that helps us a little bit, giving us a bias of what we think generally the market will do. But we have to also try and gather what we think the market's going to do today, if we're going to take trades today. All right. So we can see here how this market is making higher highs, higher lows, higher highs, higher lows. And then it's kind of been going trading within this range, within this high and this low over here. That's where the market's been trading within this little box here. So what I'm going to do is I'm going to just have the border. I don't want everything to be all blocked out like this. I'll just have the border in here, like so, okay? And that market is trading within that range, okay? Now, if that is the case, that the market is trading within a range, this price action at the moment is pushing up into a premium of that range, all right? It's pushing up into, like, back up to this high point, back up towards this big overall ceiling, okay? And, you know, at the moment, we can see how the market pushed down here, breaking significant structure, which was over here. This was swing structure on a much larger time frame. And then it decided it got down here and huge demand came into the market and pushed it all the way back where it came from. Okay, but it hasn't broken above the start of this impulse, which is over here. Hence the reason why we're trading between here and here. Okay, now on a daily time frame, or on a smaller time frame than we are right now, which is a daily. Okay, have a look here. We can see how this market came down here, went sideways a little bit, pushed up, went sideways a little bit, captured liquidity. Have a look at the liquidity grab. All right, look, if I was to do this, because you have to be able to see the different cycles of the market. If the market's not, you know, bullish or it's not bearish, then the market is going sideways. Okay, so market came up here, made a higher, made a low, made a higher high, then started coming back down here. Yeah, and then we saw the market come here, capture the liquidity. Let me zoom in some more because this might be difficult to see. Look at it on the 4 hour. Okay. Yeah, the market was kind of in this little box here. Let me try and give it a color because it's a little bit difficult to see. Let me give it a color. Let me go. Let me go here. Sorry. Let me go there. Let me go there. Let me get rid of this border. Okay, you see how the market captured liquidity here? This is a liquidity grab as the market pushed up above this kind of these highs and then started to run in the opposite direction all the way down here. And once again, push down here, breaking some structure, capturing some liquidity, and then change its mind again. Push back up. Now look, we understand that the Great British Pound, elections and all the other stuff that's been going on, US dollar, elections and all the other stuff going on, has had a lot of things going on. That's going to allow this market to be indecisive, not just trend in one direction, start going in one way, then decide to go in another way. And that's what's been happening. Yeah, this whole energy here, look, it's been kind of, if you really want to go there, we can open up this rectangle. We can kind of say that the market has just been ramping in here. Yeah, it's been in this area. Okay. But we are near a premium of this little energy that's been happening. And also this white line over here, which I'm going to make a blue line and thicken up. I'm going to make a blue line and thicken it up. And then the premium of this other little range on a bigger Russian doll is that rectangle that we drew here, from it making this highest high and then coming down and making this low. So the question is this market going to have a reaction in this little area in here, decide to start coming down bearish, or is it going to push up? Now, I don't love it. All right. I don't love it. Okay. From the perspective of this overall structure of what it wants to do. I actually at the moment don't know what it wants to do. All right. Now we haven't broken this structure. So this could still be indication, and all this energy here is correction, and it's not going to break this level and it's going to continue, meaning that if I was to draw a path, higher high, higher low. For all we know, this could make a, lower high and then decide it wants to start doing this. Okay. But at the moment, it spent quite a lot of time in this retracement phase, doing a little hokey cokey in here. All right. And that isn't inspiring confidence. Okay. The only way you'd be able to trade GU is being very sensitive to what it's doing in regards to reading and reacting to what it's doing. Okay, so let's drop down to our 4 hour time frame. On our 4 hour time frame, within that blue range, we can see how the market was making higher highs, higher lows, higher highs, higher lows, higher highs. This is structure. Yeah, the last highest low was over here, and the market broke that structure, making lower lows, lower highs, lower lows, lower highs, lower lows. Then the market stopped, look, started going sideways. Didn't make a lower low again, started making some equal lows. Lows started closing within this range here. Okay, started closing here, and then it decided finally, in fact, let's go back up. Breaking structure again, pushing up into these levels. So you can see the market's ramping. Yeah, it's ramping. It's doing whatever it wants to do. Now, if I was to draw a line currently, the line would have to be from here to here in regards to this last impulse, because this here is the highest point of this impulse, like so. Okay, and we are into just trying to draw this the best way. Just like in here, we are into this kind of premium area of this blue range where we've seen the market, you know, stall out a couple times. Stalled out here, and some you know, stalled out previously. Now, is the market going to do that again? Well, on a 4-hour time frame, this has come down here and the market has broken a little bit of structure. Now, this might be a bit difficult to see because it's a green candle, all right? But this is a swing low, okay? A swing low. Another way you can identify swing lows on a smaller time frame, guys, when I tell you, I say I'm reading the candles, it's basically you're just looking for one candle point that either side of it has higher lows, or on if you look at underneath or on the top hand side. So for example, this candle here, can you see where the wick is? Either side of it, the lows are higher than it, meaning that this becomes a swing low on some sort of time frame. Can you see? Yeah. It just like over here would be a level. Just like over here would be a little level. Okay. Obviously, this is a little bit tighter price action where it's doing nonsense. But if I was to go on the line chart, you see it kind of just scribbling up and down. But that's a way you can identify the structure. Let me say that one more time, because sometimes you guys have seen me doing it and been like, okay. And then when I show it to you on a smaller time frame, it's pretty perfect. It's because it's very easy to identify. You're just looking for a candle wick or candle which is on either side of it. The candle's wicks are higher than it if you're looking on a bullish momentum, or vice versa if he's looking on bearish. So bearish, it would be this one. Yeah, because either side of this wicks, they're, you know, it's slower than it, and it also will be here, obviously, because either side here, these wicks are lower. You see, it would be this one here at the moment. On the way down, here would be a level. Yeah. Now on these levels, all of these levels here have something that we call liquidity below the, because I'm on a 4-hour time frame. If I drop all the way down to a 5-minute time frame, these little white lines I've put in are major mountains to ants. Yeah. To the ants on a smaller time frame, they're smaller. These levels that I'm writing on a 4-hour time frame look like mountains because they're smaller. If I was to look on a daily time frame, well, these, I'm bigger than a mouse. Yeah, I'm a cat, and these small little areas made by the mouse are hard for me to see because I'm a bigger Russian doll. I'm looking at it from a bigger perspective. But don't get twisted. In the ants world, this is still a swing high, and on a small time frame, there may still be a reaction to that. There may still be a grab on liquidity from that. Okay. Now have a look. If I go from here to here, just to draw in a little range of how this market is trading. This market has broken some structure that we can see here, all right, based upon my white line, and closed down below it, and then made a retracement, because we understand that the markets like to indicate, correct, and continue. Or better still, the markets like to grab liquidity and then run in the opposite direction. It's the same. They're all the same. All right. Just how different people teach or define the way the markets move. Okay. So we can see how I'm dropped to my hour time frame, how this market is pushed down here. All right. From this level, and has left some points of interest. Like, for example, that imbalance. Okay. Like, for example, that imbalance. Let's have a look at me draw it properly. It's a little bit, push that up a little piece and bring that down a little piece. Like that 1 hour imbalance. Now, when it comes to imbalances, we have to check all time frames. Yeah, we have to have a look through. We need to cycle through some of our key time frames. Will we be able to see everything? Maybe not, but we still have to cycle through all of our key time frames. Now, on a smaller time frame, when I've dropped the hour, drop to the hour, we can see, this as a bit of a swing high. Okay, as this wick is higher than this wick and this wick. Okay, now if we drop down to my 15-minute time frame, still looking at that imbalance area, which we drew here on the 1 hour. Let me label it so that I don't get confused. It's a 1 hour imbalance. Let me do this. Oops. There you go. 1 hour imbalance. We're looking in here. Can we see anything on a 50-minute? Now look, when it comes to this, what does this mean? This means that our imbalance is a draw on price. Price is moving towards an inefficiency to come and close that inefficiency. Does it have to stop there? No. We can also see over here a little imbalance up in this little area here. So typically, you know, immediately my eyes thinking to myself that it's possible that from here to above this swing high, where this liquidity is, okay, that potentially this may be an area that the market could turn around in. That's on a larger time frame, okay? Now the reality is that the question is when is this market going to do this? When the markets are going to do moves are typically within those key power times, yeah? Those power sessions, those kill zones, those times when the markets are doing bits and pieces. Okay, now there are some indicators that I said that we can look at, we use, that are going to help you identify the kill zones. They're within the sessions, all right? And different people define these kill zones slightly different, all right? Now we know that we have Asian session, we know that we have London session, we know that we have New York session, okay? Now within those sessions, there are some power times where stuff starts happening. I've told you many ways in which you can identify them. You can identify them when loads of volume comes into the market. So just a volume indicator alone will be able to show you when certain markets get active. All right. So if we just to go here to volume and we was to scoot out, we can see around this time here. Now at the moment, I've got the wrong timing on. I've got this on New York time. Okay, have a look, New York. And you must be able to understand the difference between New York and London. It's pretty easy to do. Shall I show you how you do it? You know, right now, this is present time. I'm looking at it and it says it's about time-wise right now. It's saying that the time is 3:40 in the morning. And actually the time is 8:40 in the morning. So London to New York's difference is 5 hours. Okay? It's 5 hours. Now some people change their whole scenario, their whole timing in their trading view or their MT5 to New York hours. You can do that, I guess, if that's what you want to do. Change your whole life to New York hours. You can do. That's unnecessary if you just know that you're 5 hours ahead. Yeah, you're 5 hours ahead. All right. So for argument's sake, you know, right here, I'm gonna put an indicator on, which is also set to New York session. All right. Okay, and I will put details of this indicator, but look, you can see here, have a look. I've teamed up. If I go back to my hour, yeah, we can see how we've not only got our session, what is this? Let me give it this. There you go. We've not only got the session information in regards to London. Actually, let me drop it down a little bit, get a bit more information. Let me reset this chart. All right, as we look, you can see here that we know that we want to get to the charts for New York around about 10, 11, 12, 1, 2, 5 hours, yeah? So that's saying 9:30. So this, where I am right now, if I was to put a line, is 2:30 London time, okay? And we can also see how that volume gets active, right? You can also see how that volume gets active. So that little orange block is a New York kill zone. Yeah, so New York time between that 2:30 and, you know, a couple hours is that kind of kill zone. All right, is that kill zone area. This is the Asian session, and you can see here, because it's on New York time frame, that 8 o'clock, and we're gonna add 5 hours onto that. 9, 10, 11, 12, around about midnight to 1 o'clock. Got this Asian session, you know, going through, and it goes all the way through here to, you know, London at 2 o'clock in the morning, because it's New York times, which we add 5 hours onto. London starts around about 7 a.m. Okay, so it's exactly the same. The point I'm making to you, if you ever get an indicator where you hear people talking about American times of the session, and they're waking up at this time, it's not too difficult to understand what times it is. They're 5 hours ahead. Now, there is some discrepancies when we have these daylight saving times and the clocks go back an hour and forward an hour and sideways and another hokey cokey, but again, it's not too difficult to work out by simply understanding what time we're at in regards to the candles and looking at your actual clock in real time wherever you are in the world and see what the time is, making a difference. Now, what is the point of these sessions? Okay, so if we think about the market as a game of the market wants to take liquidity before it does what it needs to do. Okay, so say for example, have a look here. All right, have a look here. We can see how the markets came up here and took the Asian session, and they've split the New York session into the New York day and New York PM session. Okay, whatever. All right, but you can see here, nam. If it's a game of taking liquidity, then this wick here and this push up has definitely taken the liquidity London session of some previous sessions. And after liquidity is taken, we understand that the markets like to run in the opposite direction. All right, let me put my yellow line over here. Let's investigate this scenario. Now, this doesn't just work. You have to team this up with the idea of being able to trade in the direction of the market. Can you do it, just grabbing liquidity and etc. from left, right, and center from sessions? You can. It's a bit more labor intensive. It makes more sense to understand which way the market's going. Have a look at this. The market pushes up here and grabs liquidity from previous sessions. All right? That's what this indicator is helping us to see. But to be honest, guys, like I said, you don't need it. But I'm going to tell you about it. In fact, I'm going to put this indicator. I'll tell you about it for you to be able to get it because it's one of these in here. All right. Grab the liquidity from previous sessions. Remember what I say about liquidity. Liquidity is like, you go in and getting a pit stop and getting your Lucozade, getting 2 cheesy beef patties and your energy drink and whatever it may be so that you can do something. Nam, and then the market watch runs in the opposite session because it's already taken this high, this high, runs in the opposite session and takes the lows of previous sessions. Nam. Can you see? Took the low of this London session. All right. And then when it done that, and also, even if you don't want to look at it like that, then this is a swing low. Exactly what we just identifying, a swing low on a bigger time frame where there's liquidity sitting. And when it takes that, nam, what does it do? Runs back in the opposite direction. Okay? But understand that, like this is why I said to you where it comes into play, that you want to trade in the direction of the market. Now let me show you something. Let me see if it's going to play out here. Let's see if it's going to play out. Let's go for my little yellow line. Okay, so when you get markets take liquidity, that wick, okay, and then you see a big, obviously look at it on the 15-minute time frame. The market, grab that, I'm looking for my yellow line now. Look, over here, this was taken, all right? This liquidity was taken by a wick on a 15-minute time frame, and then we've seen strength and speed moving away from that area. All right. Now, some people, they use different language, different terminology, see a displacement or whatever it may be. But let me explain to you how you can trade this in a couple of ways. First way you can trade it is on a smaller time frame. You can see an indication, correction, and continuation of that in here on a smaller time frame. I will show that to you in a minute. And trust me, guys, this isn't one I made earlier. This is one I'm just looking at right now, looking at the charts. Okay. When this market goes and achieves its goal of taking the liquidity of the session, all right, that's sitting below these lows here, nam. If we drop to our smaller time frame, the market always likes to come and retest an area and make sure it closes up inefficiencies. So I drop to my 5-minute time frame, or smaller, but for our purposes, we want to go 5-minute time frame. And when that market created that big wick, in fact, sorry, let me do something to help. So I'm just trying to make this quite clear to you guys. So therefore, if you're thinking about it in your head, you're thinking about a plan. You're thinking, okay, let me look at some sessions, some areas of liquidity, and let me wait until markets go and take that liquidity, all right? So I'm giving you a plan, all right? When markets, I'm looking for my yellow line, which I'm going to actually write in my calendar instead of keeping having to find it. Let me put that in the calendar. What is the date there? And it's 9th of July at 6. Let me mute you there, King Louis. I'm getting some feedback. Let's go 6 a.m. on the 9th of July. All right. So in here, my calendar, I can tap into here. I can put 9th of July at 6 a.m. Okay, so when I drop my time frame down to my 5 minute, instead of me having to go and search for it like a lunatic, I can just click that calendar and it will go to that place. All right, so that's another little trick for you guys. So look, if we saw this, look, have a look. This liquidity was taken. I'm giving you the gem, so let me even mute this. This liquidity was taken above these other sessions before New York kicked off. New York's kicking off here at 2:30 a.m. On my clock, it's saying 9:30 a.m. because I've got it tuned to New York, because of what I was just explaining to you guys, New York times. And we're 5 hours ahead, all right? 9, 10, 11, 12, 1, 2, 2:30. But this market already grabbed the liquidity from before. Yeah, from about 11 o'clock UK time, the market grabbed the liquidity. Yeah, and as I was trying to show you on a 15-minute time frame, have a look here. Let me move this little yellow candle. If I put a candlestick zone around that liquidity grab, which is a candle, look at all of that big massive wick to the top, showing that there was lots of supply, lots of sellers coming into the market at that level here. All right. So I've put a little candlestick zone there for a reason. You'll see it in a minute. All right. Now, that market starts to move before New York opens. So once it grabs the liquidity from the other below the session level here, we're expecting, because that's what Jay's told you, whenever liquidity is taken, the market likes to run in the opposite direction. Now, we understand that this is a bearish market. That's why we draw in our yellow lines, understanding the larger Russian doll, that the market's trading bearishly. But when that New York session kicks back in, remember, when this market came and initially grabbed this liquidity, it left some inefficiencies. It left some areas of interest at the market. As soon as New York wakes up, splash some water on its face and has a look at the market, it goes, whoa, whoa, whoa. What happened? Well, we've seen that these, in these London guys left an inefficiency right in the middle, because I'm inside that candlestick zone, because that's this thing right here, left an inefficiency right in there. So where you see that displacement, where the market moves and leaves an imbalance, that always becomes a point of interest. And after you've taken that first trade, because I'm going to show you how to take the first trade, this could be your second trade with your stop, spread ×2 above the swing high. That could be your second trade. All right, we're going to test this out some more. So it's not just a one-off, because like I said, this isn't one I made earlier. This is me just having a look at the markets. This move happens, lovely move as well, going all the way down here before New York's even kicked off. Before the real, look at the volume. You see this here? I know my chart's looking active because I'm just showing you volume and I'm showing you this other indicator. Typically, I don't have any of these indicators. I'm just showing you how, if you are somebody and you need this additional assistance of understanding what you're going to do in the markets, you can use these things like volume to easily identify when the markets get active. Look, you can see the markets get active right here. What happened right here? The market started its journey massively. Okay. And when it first captured that liquidity, which on the 5-minute time frame looks like this, actually looks like have a look. Actually, on a smaller time frame, I was going to say a break of structure M, which it does. M. This here looks like an M, but not on the, can't see it that clearly on the line shot on the 5-minute. But if I drop my time frame down, you see a lovely M. Okay, have a look. Let me do it for you. Drop it down to 2 minutes or 1 minute. I should have. Let's go to here. Go to. Can you see? Can you see this break of structure M? This M over here, this big M, and then can you see this imbalance that formed within that M over here? Yeah. If I wanted to, I could say we could say this is an area of interest there. Okay. Remembering previously when we used to do our strategy, which is nothing wrong with the strategy, we just added on some more source to increase our efficiency rate, which is about the golden zone. Okay, but normally wanting the lovely manipulation end with the right shoulder higher than the left shoulder. But either way, this area becomes a point of interest. Have a look at the markets in New York session. New York just kicks off. Have a look at it. Nam, 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 into that area, and then gone. Let's try and see if we can find it again. Let's try and make sure it's not just a one-off and Jay's just lavishing about a one particular setup that he's seen. Let's see if we can see it again and again. All right. So again, I've got this little indicator on, which though this my chart is on New York time and this indicator is on New York session time, we can easily transfer it to what we do by simply adding 5 hours to whatever the time is saying down here. We know that what the time is right now, right? So that always obviously gives us a great indication of, and the reason why that's good as well is if you're on holiday, you do the same thing. If you happen to be in, I don't know, wherever, Yugoslavia, and you open up your charts, you just look at what the time is now, and then look at what the time is that New York, if you've got something, it's set over here. This is how you set your times to different, see, all these different countries. You'll be able to understand what the difference is. All right, let's have another look. So this is our first yellow line we looked at. Let's try and get a little bit closer over here. No, because that's going to take us into today. Let's go over here. So in this instance over here, this energy, we can see that the market was in a bullish phase, making higher highs and higher lows and higher highs and higher lows. We can see that. All right. Okay, have a look at here. This is the Asian session. All right. If I go by what this is saying the Asian session starts about 8 o'clock. Let's add on our 5 hours, 9, 10, 11, 12, around about 12, 1 o'clock. That's what they're saying. No problem. Okay. And then this is given an Asian session low and an Asian session high. Okay. Have a look at what happened here in London. Can you see this? Can we see this? What is this? Based upon what I've been saying then, what is this then? Based upon what I've been saying, a liquidity grab, taking the liquidity from below the Asian session, sweeping the liquidity of the Asian session, that little circle that I've drawn in here. All right. And then have a look. Let's have a look on, first we're looking at that. Messed up. I should have put locked in where we are first. We are here, which is the 8th of July at 3:15. Now let's go the 8th of July, and this is put 3 o'clock in the morning in this instance, because of the way the clocks are. Okay, so when I drop down to, let's have a little zoom into that, if you want. Zoom into it. Understanding that the market's in a bullish phase, making higher highs and higher lows. Okay. This indicator is quite good as well. It does also, it's okay. It gives you the days as well. I've just noticed some other things, bits and pieces. So this swept these lows. Nam, 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 nam. Ate the liquidity, all right? Ate it over here. In London session, ate it, okay? At that point in time, have a look. If we zoom down to our 5-minute time frame, now I can hit this. Should be able to take me back to where we are. There you go, good. Have a look. After sweeping it, the market, going back to our original strategy also, made an indication. Let me get rid of this really quickly. Made an indication. Can you see the indication, guys? Here was structure, right? This is a liquidity grab sweeping the lows of Asian session. Indication, look at the close above here. But when it made the indication, it did something. Yeah. It created this imbalance, or someone else is going to turn around and say displacement. Yeah, it moved with strength and speed away to bust this high, to make the indication. Here's the correction. Here's the continuation. All right. That can be your entry. Yeah, with your entry here and your stop here. There is another entry in here at the point when it comes and it gets into that imbalance. But unfortunately, or fortunately, depending on how well you are in regards to manipulating and looking at the charts, it's on a smaller time frame. And you know what happens here? It's an indication, correction, continuation on a smaller time frame right in here, which can allow you at some point to get a tremendous entry in here. Yeah, looking something crazy like this. But without having to look crazy, you could place your stop below these lows. You could place your, there's 3 entries. There's the indication, correction, continuation that gives you this entry below the last low, because that imbalance has been taken. No, you no longer have that concern. That's one entry. The second entry is if you can drop your time frame to a smaller time frame, which I will show you in here, which is the most aggressive and the most sophisticated entry here. Okay. And then there is another entry where you just, maybe you don't have the time to sit and wait. So this is quite good. So this is for all different types of traders. You're not in a position to wait for certain things. Maybe you've seen this big indication displacement and you need to go to work, but then you're going to place a limit order at the top of that imbalance, all the way down to below your swing low with your spread times 2, and that will be your entry. And once you take that entry, have a look. Where are you targeting? You're targeting the opposite swing low, or at least the opposite liquidity. All right. So for argument's sake, have a look at this one. London swept down here. All right. You've taken Asian low, Asian highs over here. That would be your let me get rid of this, hide this. This would be your first target. All right. Because as you can see, as soon as you took that liquidity, what happened? The market ran in the opposite direction. The only difference is here is why you was able to prosper differently is because you was trading in line with the trend. So therefore, the market wasn't supposed to be coming down and breaking past where your stop loss was. And it didn't. It did make a little run in the opposite direction after grabbing the liquidity. Look, nam, 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 nam. But then it continued to push in the direction that the market was trending in. So once again, and so let me show you that smaller entry I was talking about, which is in this imbalance. It's dropping my time frame very low. Hopefully I can get it on the 1 minute time frame and showing you how instead of it being that like that, move this out of the way. Come on, get out of the way. Can you see over here? This, I'm going to get rid of this indicator that's taking up world of space, eye space, all right, like so. This is the lowest point here. Can you see? This wick is the lowest point. Previous swing high on a smaller time frame is this wick, because either side of it, the candle wicks are lower. All right. This broke this and closed above here, making an indication. Okay. Making a big old retracement, but not breaking this level here. Because really, if I go on a smaller time frame, you're going to see some imbalances. You're going to see some other stuff. I don't want to go lower in a minute. It's unnecessary. But I'm showing you, because I'm just showing you how it's universal. Yeah. And then we've seen a close here on a 1 minute time frame all the way up here. That would have been your entry. Like I said, a lot smaller than what it was before. How would you stop below this level with your spread times 2? I personally would have covered, at least try to cover that little gap that I can see here that might be unique to GBP USD, but it's cool. That's 5 pips. I'm good with 5 pips. I know what my lot size is for 5 pips for my account size. It's decent. All right. And at that point in time, you're going to get into that trade, and if I can find it, you are going to be going, this is the smaller entry over here, to the moon. Let's get back our little indicator to give us some structure of where we're trading to. Okay, now let me show you something which is very interesting, because we're talking about sessions in this session. Okay, in this Breakfast Club, we are talking about the session stuff. Now, if we think about this, these are all different teams. This is England, this is Netherlands, this is Spain. All right. They're all different teams. And as and when their time is ready for them to go and do something, they're just about grabbing liquidity. London, nam, grab the liquidity Asian session. Yeah, pushed up here. This is all still London. All right, this is all still London. This here time that you can see saying 2 a.m. is 7 a.m. UK time. This is all still London. Pushing up. All right, pushing up. Obviously, went through Asian sessions calm. All right, have a look. Let's look back. I don't know if we're going to get the data. I don't know if we're going to get the data. Let me check. We are not going to get the data on a 1 hour. Okay, we're not going to get the data on a 1 hour, and I can't be bothered to go all the way back. But what I wanted to show you is that when New York kicked in, all right, have a look at when New York kicked in. I really wanted to go all the way back and show you what level of liquidity was taken back here historically, which I really should do, but the way this chart's moving, it's moving slow. Have a look. New York kicked in, and after grabbing liquidity by pushing up in this level, we're thinking to ourselves that the market wants to. So let's see. I really need to go back. Okay, yeah. So I really do need to go back because over here, there's definitely a liquidity level that was taken up here by this push. Yeah, and we've seen the market from there running back down, back into these sessions, a different session low. All right. Let's go and look somewhere else and have a look for some different energy. All right. Let's look at let's look at another pair. Let's look at an indice. Let's see if we can see the same thing in an indice pair. Okay. Now, like I said to you, when it comes to this trading thing and working it out, don't take my word for it. Just backtest. You know, just say, okay, that looks quite interesting. Maybe something I want to get involved in. I want to see is, you know, should I backtest it? Okay. Well, this is a US 30. And what I always want to do is I want to kind of know what's generally happening in the US 30. All right. Now, I haven't liked the US 30 for where we're sitting, but let's try and zoom in and see whether or not this offers us any type of insight and to be able to trade even in these kind of conditions. I'd like to pull things back down to here. Why am I want to pull it back to here? Because if I was looking at this, even if it was in this range, we've seen this data point, I've drawn this pink line, and I may have had this pink line sitting on top of this level here. Either way, here would be a potential discounted area-ish, but it's kind of still in this range. But either way, let's just try and see whether or not we'll be able to see some information in regards to that yellow line. That yellow line is Monday, the 17th of June. All right, so let's put it in here in our calendar. 17th of June. All right. And we're going to go and we're going to have a look here on a smaller time frame. We want to see that indicator showing us some different session information. Let me reset my charts. This is something that you guys can look at and see whether you see any patterns or any, you know, setups that keep happening based upon sessions. I'm sorry, I'm just trying to find this yellow line. The time is 3 o'clock. So 1500 hours in this instance. All right. All right. So we're going to zoom in so we can see these session stuff that's going on. Okay. And we can see, if you can zoom in, let's imagine that this is Friday. Okay. We're looking at here, for example, this is the Asian session. We can just look at this example here. Now, if we're saying that we're interested in the buy, okay, when we're here, this is London. Okay, this is London session here, London low. We've seen a push down below, grabbing this liquidity below some of this previous New York session. Okay, the market did do a hokey cokey. Then we saw a big push here, capturing further liquidity sitting below these levels. All right, so let's see, because remember, just because we see it doesn't mean we just hit the button. We're not playing snap. we still are looking for what we look for: indications, corrections, continuations. We want to see strength and speed of the market moving away from an area. Just lost it again. Here we go. All right. So look, we've seen some scribbles in here. Let me get rid of these scribbles because this, I don't know when I scribbled that in there. So we've seen the market. This is London session, going all the way here to New York. When New York, just before New York started, we've seen this market push down here. So we've seen London push down here for this small, narrow kind of Asian session that was going on in here. A little bit of liquidity was taken, the market running in the opposite direction. Wasn't enough. Push down again. There was liquid. Remember, underneath any swing low, which is simply identified by finding that candle where the candle either side, all right, is higher than it, the wicks. So that becomes a swing low, just like vice versa. Looking at this, this is a swing high. This is a swing low. This is a swing high. This is a smaller swing. This is a smaller swing on a smaller time frame. You see, this is the way I'm doing that is by identifying a candle where either side of it, this is a little level. Do you understand? This one that goes all the way down here, this wick here, this is a level. Okay? This is a swing level over here. Just be able to identify that with the candles allows you to do so. Now, a lot of people like to understand what they get a daily bias by what the previous day did. We can look at that also. But for now, I just want you to peel your eyes here. So we saw this market push down. And remember, all of these little yellow or orange, these lines that are extended, are showing you liquidity levels. They're showing you the highs and lows of previous sessions, but ultimately they are liquidity levels. You see, when this market here swept this liquidity, it pushed in this direction. Okay, now for whatever reason, it didn't want to continue pushing immediately. But in our strategy, this would be an indication above this previous high that I marked off here, but we didn't get a correction and a continuation. You see, but there is an entry down here when it swept the liquidity on a smaller time frame. You see, and that's why if you got in on this time frame down here on a smaller time frame, your target would be the previous liquidity level. Am I making sense? Because you got a small entry in here. Just think about, you're always trading towards liquidity, and liquidity is always sitting above these swing highs, swing lows, or equal highs and equal lows. And when I say equal highs, we mean relative equal highs, because we don't know how Awanda gives us our candles, if it gives us our candles perfectly or not. So relatively equal highs is also a liquidity level. Have a look here. The market comes and pushes down below this new liquidity level in New York. In New York session, NAM, just as it starts, it NAM eats this liquidity level. I'm expecting it to run in the opposite direction. But I've got even more confluence because I want to be in for the buy, because the overall market is trading bullish. And we are sitting right here on this line, this area of demand, this discounted area. So I'm even more into trying to get involved in here for the buy. So when I see this NAM liquidity, I could be dropping my time frame down from 15 down to 3 or smaller, looking for indication, correction, continuation. But have a look. This market, see here, we've got some structure in here. We did get some wicks. But when we got some big displacement, some big strength and speed was here. Look, it got up here, it thought about it, but then it went boom. With strength and speed that did what? That did what over here, over this level? Somebody knows. This is a level here. What did this do? This little push with strength and speed. What did it do? What did it capture? What did it capture? It's the same theme every time, guys. It captured the liquidity that was sitting above here. Boom! With strength and speed. Bang! And that push there gave us that area of interest, that displacement, that imbalance. That you could have either, you ain't got time, you're busy, turn around and say, you know what, Jay, I've seen it, but I can't wait for the entry, manual entry. I'm going to place my entry like this, I'll stop below this lows, yeah? Or you just want to take in consideration that imbalance, slightly higher risk. Or when this market comes into here, can you see in here? You're going to drop your time frame down and you're going to get a fantastic entry. Let's look at the time, 11:45 on the 17th. Let's have a look. 11:45, 17th. Pow, watch this. I'm going to drop from 5 minute all the way down to maybe my 3 minute. My 15 minutes, so I was dropping from. I've got a feeling that I messed it up. I've got a feeling, where's 11:45? This is 11:45. Yeah, sorry, there's the imbalance there. Can you see it in here? Have a look. What are we looking for? Well, obviously, this here is going to be previous structure, indication, correction. The market continues. It actually bursts out there with quite a huge burst on a 3 minute time frame. Let me drop down to my 1 minute just so I can really pat myself on the back and show you the smaller entry. All right. And I'm saying these are not ones I made earlier just for this session, just to make out that everything I say is correct. This is us just looking at the markets right now. We can see in here, indication, correction, continuation. It's still just giving it to us in this big candle. Either way, it's another entry. When that candle closes below this, that's actually exactly the same as kind of the imbalance distance. And there you go. Markets running up, you over the moon. Now let's go and look out. Now we're in that trade and we're rinsing. We're in that trade and we're rinsing. We're feeling good. If you've ever been in a trade and you're making money, you feel good, feel like you've achieved something in life. You start walking around a bop in your step. All right. So from here, this market doing this, what are we doing? We're looking left and looking at these different session highs. And every single one of them is a point whereby we're expecting to see some sort of retracement. Have a look over here as the market came and took this previous London session high. As it took it, it made a little retracement. Here we got the next one, is New York session high. And if I can go back, I'm sure there's another one somewhere. Look, as this market is going to what took this high, boom, retrace. We're seeing this market going and reaching. But the whole point, this is the difference between if you was taking this trade counter trend, is ultimately this trade is supposed to be making higher highs and higher lows. Yeah, ultimately this trade is not supposed to come and look. If I draw a path in here, have a look at the path. Higher high, or higher low, higher high. Ultimately, you're not supposed to be coming back against and breaking these structures. Obviously, where we are is kind of in the middle of that range, is a little bit booky. But based upon the fact that we've drawn our range in, this pink line, you know, this is what we're trading towards. And have a look how the market respects that pink line, that angle, that trending line. Look how it respects it. If I was down here, looking over here, the market go all the way. Let's even do that one real quick. Let's finish off doing that one. If I was all the way over here and the market was back down on that line, an area of demand, yeah. And now let's put our session or indication back on again. Have a look once again. We can see this is London session with these two green lines starting at 7 a.m. Though it says 2 a.m. on my clock down here, it's because we're in New York time, which is 5 hours difference. So that's 7 a.m. We've seen that when we got into this level here, look, New York starts nam, 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 nam. Yeah, we've seen it actually push down below that session here. But once it pushes down below that session here, and I'm thinking to myself, because it's grabbed the liquidity, that it wants to run in the opposite direction, because I've told you that's what the liquidity grab's about. It's about getting a Lucasade and getting your running shoes on and getting ready. So look, nam, 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 nam takes that London low, and then boom, explodes from that area. Yeah, and this happens over and over and over again. So look, if it explodes from that area, look, I'm on a 50-minute time frame. There is an entry in here, and there was also another entry taken into consideration. This, you see, as this market pushed up here, the area that we want to see is when it broke structure, which is essentially over here, it created an imbalance. It's in here, there's an imbalance. It broke that structure there, boom, created an imbalance. Now that is a point of interest that when the market comes and taps back into that area, I am going to be looking for another entry if I missed my entry down here. Yeah. If you're not available to take it as a market execution because you can see something where you're going to have to put your entry here and place your stop below these lows, and you're going to have to go about your business. And then when you come back to your trade, you're going to go up, you're going to say, okay, that looks all right. I'm a winner. You're going to start walking around your office again with a bop in your step. Every time. All right. So this indicator that I've seen a few of them. This indicator is called, what is it called? It's a good question. I don't know what it's called. Interesting. I don't know what it's called. I think it's called, I think it might be, someone made it calling it ICT sessions, maybe. I don't know. Is it this one? It's not showing me here. Maybe there's a way I can see. Maybe there's a way I can see the name of it. Yeah, here you go. Now look, it doesn't need to be this one. It could be anyone. I happened to just stumble upon this one and I was looking at it. All right. So one thing I will show you about this is that you see this, the only real setting that you need. Obviously, you can see it's set. It's not going to show me the indicator over 4 hours. It's set to America time zone. All right, is what it is, guys. You can make that London time zone if you want. I just left it at that time zone and added 5 hours on. It's not too difficult. But this here is the session drawing limit. I think by default it's only about 3, meaning that it's only going to show you 3 of these little boxes back, 3 sessions back, 3 kind of blocks back, 3 days back. I put it on 300 because when I'm doing my analysis and I'm showing you guys, etc., I want to see historically so we can backtest. So you're gonna have to put this number up. All right. Apart from that, everything else is kind of set as default. You can have a play with it if you want. Okay. So that's called ICT kill zones and pivots in here. I'm actually going to favorite it. I need to unfavorite some of these things. So I've just been favoriting stuff. ICT kill zones and pivots. Just saw it here and just favorite it. There you go. All right. But either way, it's not nothing. It's just a kill zone. It's just a session indicator. It's just a session indicator. And I'm saying to you, when you trade the session liquidity grabs with understanding and the confluence of seeing an indication, correction, continuation, with the also added energy that, especially if you get into a good trade before New York opens and it left an imbalance when it first kicked off. Yeah. So say, for example, you got into this trade somehow. I'm trying to find one. It doesn't matter. So say, for example, this one here, if it lets the imbalance, understand that once you've taken the next session high, be concerned that the market's going to go back and close that imbalance. All right. So look to see where you had that indication that broke structure and see if it was strength and speed and you had some sort of imbalance form. Yeah, some displacement, some fair value gap. It's very, very possible that the market will come back there and tap there before going again. Yeah, doesn't always happen. And it doesn't matter because by that time you've already been profitable in your first trade because I've shown you how to get into the trade from early. All right. But the point is first and foremost, I want to know which way the market's going because I want to trade in line with the trend. I don't want to be out here trying to trade against the trend if I don't need to be. All right. You don't get extra points for trading against the trend. I want to be able to tell and be like, okay, the market is making higher highs and higher lows. All right. Now, when I do that, obviously, so say, for example, up here, when I got up to this level here, I'm interested in selling. If I'm good enough to understand trading against this larger trend, because this is all the way on a daily, this is huge. This range is going all the way back to 2022. But here, I know I'm at the top of the range. I'd be interested in selling this range. And if I saw over here, I would like to pull this back, but I've got a feeling it's not going to give me the data. So I'm going to delete everything off my chart, like so. I'm going to put a yellow line right there. And we already understand that, for argument's sake, that's the top in a premium, based upon however I drew this line. So I'm not going to go back, I can't bother it. Let's imagine that's a premium, okay? So I'm going to be interested in the back of my mind, selling. We're in a premium, I want to sell. I could draw my line like this. This is the last low before the highest point. Then I can, if I wanted to, understand the liquidity. I could do this by eye or use an indicator like so. Like so. Sorry, it is on. It's just not showing it to me because I'm in the daily. All right. And then when I drop down my time frame down to, let's just go to my hour so you can see that indicator. And let's try and zoom in. And let's try and see where I put my yellow line, which I should have just rewound it to that point, shouldn't I? Because now I'm lost. Now I'm lost. Now that is 4 o'clock on the 1st of April. Okay, which is my birthday. All right. Let's go there. All right, so at this point in time, have a look. Let's try and look at that indicator. Where is it? Why can't I see it? Did I turn it off by accident? I didn't turn it off by accident. Or did I turn it off by accident? Is it on? Is it off? I don't even know. Why can't I see the indication? Oh, I tell you. Oh, there you go. Let me see. Maybe it goes back further than this 300. No, it doesn't. All right, so there you go. So I'm interested here. Have a look at this market. This market pushed up. If I do another line like so, so I want to get even tighter. I want to get all the way in here. Yeah, I want to get all the way in here, seeing what's going on. I don't know what I'm going to see. I'm just checking. Okay, in this instance, we can see our Asian sessions, or Asia session over here. We can see London staying within that Asian session. We can see after London us breaking out here. There isn't necessarily been able to see it here. All right, isn't necessarily been able to see it here. Look at structure on the 15-minute time frame. Structures all the way down here, so in regards to seeing that structure. Okay, but let's have a look at something. Let's have a look to see whether or not I'm going to be able to. We're going to be able to. Let's look over here for argument's sake. Asian session in here. All right, I don't know where the little lines are extending left and right's gone. Can't see them for some reason. I don't know if I've just turned something off. But we saw the market wick down below Asian session. Come and take the liquidity above this session here. Every time it takes the liquidity, guys, think to yourself the market wants to run in the opposite direction. Yeah, but in this instance, the market is bearish. So overall, we're interested in getting in for the sell. So when we see this market here, London take, I don't know where the little lines are. Before I just had the little lines, it's gone for some reason. Take these highs with this wick. Have a look at this again. Remember what I said to you about the wick? We want to see strength and speed. Let me show you something once again. You ready? From here, we can see a bearish engulfing candlestick pattern. Like that. That's the candle. And that big wick, those two wicks that you can see over there, candlestick zone, took the liquidity of the previous Asian high over here, and they move with strength and speed away. So I'm going to see what time that is. That is the second at 4:30. So that is the second at 4. Actually 4:30. Okay. Now I want to show you something. I'm going to drop my time frame down to the 5-minute time frame. I'm going to use my thingy majiggy. my calendar. Now, what you could see here, let me go back to the 15-minute time frame because I can't see on the 5. Let's go back on the 15-minute time frame first. Is a little imbalance as that market pushed down here and breaking some previous. That's not necessarily on a 5-minute time frame, but we can see this imbalance in here, yeah, which is of interest because this is all still within the session. All right, it's all still within this little London session, but this liquidity here is giving us an indication that this market wants to push down because it's grabbed all the provisions. All right, it's grabbed all the provisions. Now, what we want to see is we want to see it breaking some previous structure. All right, now this didn't potentially break that structure, but let me show you something. This push from here, this red candle and this red candle closed and broke and took the liquidity and broke this structure below here. All right, so now I've zoomed in, I've adapted that below here, this did. Can you see? And if we look for that push that broke the structure, and how do we identify these swing low structures? We want to see a candle wick that either side of them are, in this instance, higher because we're looking underneath price. If it's the other way, this would be a high. It's a bit tight because of this one, but you know what I mean? On the other way around, we're looking for a candle wick where either side of it's lower. This was the structure. Grab the liquidity there, but when it did that push, it created an imbalance because it pushed with strength and speed, 2 big red candles. Yeah. And as we can see, the market did what? Came back up in here. There's an entry in here on a smaller time frame, but there's also an entry when that market, let's go to our 5-minute for our entry. Hopefully it's going to take us to the right time. Hopefully it's going to take us to the right time. Yeah, have a look. All right, as the market came, look at that, beautiful, into the imbalance. Look at the candle closing below there. That was our indication, correction, continuation. So I've given you multiple ways for you to understand and to get into these traits. That would have been one based upon indication, correction, continuation. Another one would have been someone saying, Jay, I've got to run. I'm not here for a manual entry, placing a limit order here with their stop above the swing high with their spread ×2 after seeing liquidity being taken off a previous session and understanding that the market is trading bearish and being able to hit the button here and have a look. That trade goes to hell. Yeah, I've given you multiple examples, guys. So if we was to go to present time, let's go to present time. I'm going to finish up. We have run over, but let's go to present time. All right. Let's go to present time. So for a potential trade, maybe today. So we can see here that ultimately the market's a little bit fraffy. All right. It's a little bit fraffy. Asian session's been in here already. This morning, we've seen Asian session low. It's taken. Look, Asian session's lows taken. And what happened? Ran in the opposite direction all this morning. Ran in the opposite direction all this morning. Because I told you when it takes liquidity, it likes to run in the opposite direction. Now, when we come up here and we potentially take Asian session high, the question is when is that going to happen time-wise? And is this market going to decide it wants to then have another little retrace? Because this here is just, it's a bit of fraff energy. Look, it's kind of a bit sideways it's on this smaller time frame. All right, I'm going to go to my 15. Now, ultimately, what we really want to know is what is the market doing from a bigger picture? And remember, I already said to you that I've deleted everything from my charts, but I said I wasn't really over the moon with how US 30 is moving. I wasn't really over the moon with it, with the energy. It wasn't really like, wow, that's really great market structure. It was a little bit like, yeah. It was a little bit leave it. All right. It's a little bit like, yeah. But we are here in this, if you want to say, seems to be near this demand area of this yellow range. I'm going to make it different color so it doesn't confuse us, of this orange range. So potentially, is this market going to get some bullish energy? If it is going to get some bullish energy, I'm looking on an hour time frame here. Maybe it needs to sweep some liquidity of some previous lows first. All right. So maybe this market, for all I know, might do this. sweep, and then come down here, do like a Rolex sweep down here, and then decide it wants to go. And if it does do that, I'm going to be targeting this high first. Oh, sorry, this. Well, no, because that would be taken already. This session high here, yeah, and then the next highs and beyond. Yeah. So this is what we're looking at. We can see liquidity below here. Why? Because this wick, either side of it, is lower. Or higher, sorry, in this instance, higher. This becomes a little swing low. And we're always trying to identify these swing lows and swing highs because that's where liquidity lives. If somebody on a smaller time frame than an hour was taking a trade, they'll be placing their stop above one of those little mountain tops. And a mountain top to us, even that little wick, and these little two candles, is a mountain top of lots of candles on a smaller time frame. Where someone's like, yeah, I'm going to place my stop there. Okay, cool. Market likes to come and eat those stops. Yeah, market likes to come and eat those stops. So maybe this market's going to do this, push up in here, grab some liquidity in here, above here, or maybe even it keeps pushing and takes, yeah, maybe, we'll see. But it's about reading and reacting to what the market does. That does do. But the sessions and these little lines that it extends gives you a way of being able to see where previous liquidity lies below session highs, Asian session high, Asian session low, London highs, London session high, London session low, New York highs and lows, New York session high, New York session lows. Okay? This allows us to see these things. Guys, I hope that you've learned something, another little bit of source to be able to look out for. You're looking to make sure you're trading in line with the trend. You're looking to see that when it goes in and we see a liquidity being swept, we want to see some sort of strength and speed moving from that area. And more than likely, that would be the indication. In that indication, normally you'll get an imbalance. That the market wants to come back into that imbalance of where it broke the structure. You can either get a trade in a smaller imbalance and a smaller indication correction continuation. You can either take the whole area of the imbalance and the swing low as a limit order, or you can either wait to get a correction above that area, manual execution, market execution, hit the button on the basis that the market is going to be trading. And where would your target be? Your target would be the next place where liquidity is. Now, if you're trading in line with the trend, you may be safe to hold that into the retracement after it grabs that liquidity, starts coming back down, and then grabs wherever there is another bit of liquidity, i.e. a candle where the wick is lower than the other two either side, yeah, which is going to be a low, a V or a mountain top, yeah? And you can ride it if you're in line with the trend. If you're not in line with the trend, you can't ride nothing because the market's not going in your direction. So take your money, all right? Guys, good morning, God bless. I hope there was a little bit of source. I hope somebody was like, oh, okay, interesting. Let me see if I can see it now, you know, and I can back test it and be able to implement it in the markets. All right. That's all you got to do. You don't got to take my word for nothing. Assume that I don't know what I'm talking about. All right. Assume I don't know what I'm talking about. And then all you have to do is for yourself, just check it out. Just see what it's saying. Guys, for the people out at home, like and subscribe and all them kind of good stuff there, because I do give away some source in a way which is simple and straightforward to understand. Okay. The reality is there is only one God. Okay. People can describe it and explain it in a million gazillion different ways. But the bottom line is do you understand it? However, which way you understand it, the markets, that's fine. Doesn't have to be smart money concepts. Doesn't have to be ICT. Doesn't have to be Wyckoff. Doesn't have to be this. Because when you put them all on top of each other, all these books are saying the same stuff. They all talk about the same God. Just speaking about them through somebody else's interpretation, whether his name is Jesus, whether his name is Muhammad, whether his name is, it's all about the same God and their experience with God. It's the same with these markets. It's the same. They do these same things, whether you want to describe it as this or you're going to call it that instead of something else, the same. You just have to understand it. There's going to be an imbalance or a fair value gap or you know, it's the same stuff. Inefficiency, it's all the same. It's all the same words. The market does this, does that, and then pushes down. Is that Wyckoff? Is that grabbing the liquidity? Is that a market consolidating and grabbing the liquidity? Is Wyckoff saying it's the same thing? Of course, they were the same. Then you have the spring, and then it comes back. Is that it coming back down to tap into the imbalance? Is that coming back down to it's all the same? Is that the correction? It's all the same. Yeah, I just choose to explain it in my way, which I think should resonate, and you guys should be able to understand it. And once you do, once you have this broad understanding, I'm telling you guys, this broad understanding of the markets is going to help you, because you're not going to be able to trade like me. Let me say this. You will not be able to trade like me. And I can't trade like you, because I'm not you and you're not me. You've got your own emotions, you've got your own life of how, when you're at the charts, etc., etc., etc. So all I'm trying to give you is like an overview. Like, this is how you do the step over. But Ronaldo step over and Mbappe step over, or not even Mbappe, Ronaldo, because Mbappe probably, grew himself out of Ronaldo. But let's just say Ronaldo step over and I don't know, Foden step over. They're different. They've got a different energy. They look different. They both are step over. They both might throw the defender off, but they're different. So I'm teaching you the step over, and I'm saying, guys, put it in the market, add your own sauce on it, understand it how you need to understand it. If not, follow me to the T. But by all means, if you've heard a little something else, or there's something else you like, yeah, add your sauce. I don't care. If I've given you one little bit of information that's going to help you in your trading, then my job's done. Yeah, because like I said to you, it's not only just the technicals and that, it's the fundamentals, and it's the mindset, psychology. Very, very impactful, very, very have a big impact on your trading. All right. But guys, good morning, God bless. What I'm going to play something about BlackRock, the BlackRock of Japan, full documentary. It's only 25 minutes long, saying that they own Japan, BlackRock. All right. It's going to be interesting. But guys, good morning. Not even good morning. Forget about that word. Amazing day. All right. I've already told you guys, I'm not mourning anything. Nobody didn't dead. If you go back to history and understand where the word good morning comes from, it came from when slaves used to be troubled all night. Yeah. And their loved ones were murdered and raped and troubled. And in the morning, slave master used to have think he could take the piss. And in the morning say, yeah, good morning. As in mourning over your loved ones. Yeah. Now, I don't want a good morning. I want an amazing day. I want the whole day to be great. Okay. Not just the morning. I want the whole day to be fantastic. Okay. So amazing day.